So here I got the chart, 5-minute candles, 10-day chart for CAPR, Capricor Therapeutics. So as we can see, there's been a real strong price movement. Do an uptrend. See, there's been a strong uptrend, as well as a push from under $5 to over 12, back to under 7. So some extreme volatility, right? Topped out twice here. It's going to form some resistance at 1070 to 75-ish range. You can see clearly here, as well as the top here around 1225, 1235-ish. So let's look at the daily candle 1 year to get a good picture. I got some points of resistance already on here. So actually, let's look at the go 200 day. So check this out. In April and March, this was sub $2. Spiked on April 29th with 200 million shares, all the way up to $10.88 or $11, a little above $11 briefly. Formed resistance around 850 or up here, from 825 to 850. Formed the top of this, the body of this candle, as well as these two, right? So that's where here we are right now. So the question to me is, are we going to turn this previous resistance point, 825, 850-ish range? Is that going to form support? And are we going to start building up? Most likely, we're going to have to cool off after this type of movement, as we did already. What I see in this chart, I see a lot of people that probably got caught bag holding on this, waited for this run to get out, broke even, or caught a little bit of profits and sold, and here's all the resistance. And now the people that loaded on this spike are probably going to be looking to do the same, as they are already. If they buy anything with any big size over $10 a 9, they already took a under 7 ride, you know. So they were already, if they didn't either take their losses, they already experienced a lot of emotions and fear, and a lot of downside. So, and then you got to think, after the spike, it pulled back to the 50 SMA here to under 5 last time. 50 SMA is now at 540. So I mean, I wouldn't be surprised if it at least pulls back to the 540, especially when you note the 200 SMAs at 3 is saying right here. The MACD is curling down, and the RSA is already kind of high. So it looks a little overextended to me, but at the same time, there is a lot of uptrends. I mean, when we look at the 90-day daily, see this steep uptrends, most likely going to cool off. And see here where we were talking about earlier, the resistance here at 810 and 850 that we briefly got over for a couple of days, but we're selling back off, and we'll see if we can hold it. And if not, we'll have to, let's look at the year, where I got all my resistance and support levels from this year chart. So I see some strong stuff here at 520 on this, around 420. There's some around 475 here. There's some at 370. There's some at, you know, all the way down here under 3. But I don't know if we're necessarily going all the way down there. But if you follow this uptrend, it looks like we're riding on this year chart. We'd be put us back to 650. So if I was going to hold this, if I was really bullish on this company, I'll wait for a pullback under 7, under 675 ideally, and try to load that 650 or under dip. If you think this is continuously going to go up, I'm a day trader. I'm going to be just scalping this off fear. That's what I like, when these movements make these huge moves and you guys make a lot of money. People won't give it up. They don't just hit it and quit it. They keep coming back, and they'll catch the downside and then have to keep averaging up, providing bounces for a trader like me. For example, when it went to 12, I'm loading it on the dip down once it breaks under 9 really fast for maybe a quick 7-8% move really quick and getting out, then trying to load again at 8 underneath my initial entry. And so on every time, trying to get lower than my first one. I'll catch the bounces on the downside on the fear, because it usually bounces pretty quickly and sharply. But you gotta know what you're doing, because that's a very dangerous strategy if you're just buying falling knives. So you gotta know what you're doing on that and have the experience. But it's besides the point. So we can see the 810 and the 850 point right here is gonna be the crucial one. Then next, I'm gonna say we're gonna talk about on other time frame. It's gonna be 775. That's gonna be the next support level. Then it's 750. Then 720. The next one I see is 665. So say we wake up on Monday and the prices, I'm not going to load anything. I'm not chasing this pre-market no matter what. And this is all under the condition that no fresh catalysts are coming. This is just all price action, this video. So if there's no price action, no new catalyst, I will not chase this over 8. Of course not. I will wait for a dip. The 775 breaks, and then the 750 breaks. Then the 720, my 3 support levels I'm watching to hold in the 7s. I'm looking for a load in 665, right? From around like 665 to 680. That range is where I'm looking to get my first load on panic, which will be on this uptrend and previous support resistance points on other time frames we can't see here. But also $6 below that. If that can't hold, 650 goes right through there. I'll kick a loss right under that 650 and try to reload a 6. Save me almost 8% of downside, right? 650 can't hold. I mean, if $6 can't hold, 520 would be the next one. And then here's all the other ones we just went over. Let's go over the 5-minute, 5-day, so last week's. So this is the recent resistance and support levels that have been built on the recent price action. So it's very same. It's all based off the ones we already went through on the 1 year. The 720, the 750. This one shows a 780. So 780, 775, same thing pretty much. $8. So as a price targets over $8, say if the $8 holds, or if we get that 775 load or 750 load and then it pushes over 8, I'll be looking for 850 will be have a little bit of resistance from over here as well as here and these spikes. So 850, $9, 940, 980 right here, 1020 right here, then 1050, then I'm going for the 11, or no, not the 11, the 10, the 1080. Well, 1080, 11, we'll say that's one. From this resistance and this little support level, there'll be a little gap that will move fast. So I lock profits. If it gets to 1080, I'm not going to let it drop under 1080 on me. I'll take profits there and look to load on the 1050 or the 1020 to save the downside. So after 11 though, 1165 right here, $12, and then we gotta go back to the daily candle and actually look at the 2 year. If it can break $12, which is, we're gonna see how we got this resistance once we did break not only the resistance from this spike here in the end of April and last week. It's right here. As you can see, it gets heavy at 1080, about 1140, then 12. We break that 12. Look, there's a pretty good gap from 12 to 13. So if we can break that 12 and hold over, I'm looking for the 13. over 13. I'd say I'd be looking for 14. 14. 14. I'm not gonna get too ahead of myself. Cause I think more likely this is gonna fade, to be honest. Because let's look at a little bit into the fundamentals. So this is where I'm gonna start. I'm gonna start at this 10K that they filed in April, so we could see a general picture of the year income. So look, this is important. As of March 27th, they had 8.9 million shares. So we gotta scroll down and find the important info. So here we go. So the end of December 31st, 2018, they had 4.2 million. 2019, they had 3.8 million, right? It's worth noting. Check this out. 2018, their revenue was 1.6 million for the end of the year. 2019, 1 million. So their revenue significantly shrunk before the corona. And you got to figure, even at this point when there's about 9 million shares, if it's priced right now at $8 and they have a $1 million a year revenue, I mean, that's not good at all. Net loss 7.6 million. So it's worth noting they did lose less money. That's nice, but they're losing $7.6 million off $1 million of revenue. But so like I said, let's go over it one more time on the top. As of March 27, 2020, there's 8.9 million shares. So let's go back to the SEC filings and let's go to the most recent 10Q that was filed in May. Check this out. As of May 13th, there was 14.2 million shares. So look at that. There's 5 million shares of dilution. They're more than 50% of they increased it 50% that quick of time. So this is a dilution play. Now people probably aren't going to understand that until they look into the SEC filings. So now you got to figure at 14 million shares at $8. They're valuing this at what, 80 million plus 104 million market cap, if this is the current outstanding share count. But check this out. Since that 10Q, there's another 42B right here. So they're dilution play. They're not profitable, barely any revenue. There's a lot of speculation on the news, what's coming. They got a COVID play people are waiting for, as well as some other things in their pipeline. But I'm not gonna go over that because a lot of people already know what it is. So they're already buying in hopes to sell to the news, but that just leads to a sell-off and not upside when the news comes. So this might be the run already, on top of a pump from we all know who. So what I'm thinking is buying this week on more fear. I'm looking for that 680 to 650 load probably on Monday, and then probably a bounce up maybe to like 750, 775 where I'll take profits. And I'll rinse and repeat, even if I have to keep loading lower on lower support levels and selling lower every time, but it'll still be nice volatility. I'm thinking, I mean, just look at the last 5 days. You could have caught this bounce, got out real quick. Caught this bounce, got out really quick. Caught this bounce, waited, got out. That's not, you could have got this bounce, wasted your day. But then you got this bounce, caught this bounce, you know what I'm saying? So there is a lot of upside on this from the bounces and if you're chasing even. But now there's so many people that are going to be down, I think there's going to be too much resistance. So I'm looking for that 680 to 650 load, followed maybe by like a $6 load bounce, and then maybe like a $520 load bounce next week.